Hi everyone, and welcome to the IMC Seminar. We are this day visited by Tom Aabo from Department of Economics. And among many other things, Tom is looking into kind of the personality traits associated with CEOs and other corporate strategies. This is, of course, a really interesting field. We have had various people who have studied CEOs over the years. And this is something that's notoriously difficult to get a grasp on. What does it actually take to be a CEO? Which kind of election landscape do you go through in your life process? And I think that can teach us a lot about both what actually happens in the boardrooms, but also the kind of skills that it might take to do that kind of decisions. So Tom, we're really glad to have you join us today, and please take us away.
Great, thank you very much, and thank you very much for the invitation. The voice is clear, or
all is good.
Great. Okay, I'll just start sharing my my screen right away. Yep. Okay, does this work for you?
Yep.
Great. Okay, super. Thank you very much for the invitation. It's a great privilege. Probably many of you have the same problem as I, that we are living in silos here at AU. I'm in the corporate finance, and I seem to work with corporate finance people. I'm interacting with corporate finance people. I'm talking to corporate finance people. I hear their presentations. So we're kind of living in silos, and sometimes it's really nice to break out, because you may get comments that you definitely wouldn't get from corporate finance people. Some, of course, maybe not be that relevant within the silo, but especially I think a lot of contributions is actually once you step out of the silo and get some insights from other fields. So it's a great pleasure presenting for you today. Having also said that, some of the things that I say may be kind of, I think, of course, you know that, but please interrupt me if you, of course, do not know that, because I'm kind of used to the corporate finance audience. And on the other hand, if I kind of use a lot of time on some kind of like big five traits and you know all about it, just say, well, okay, hurry up. So, and please just interrupt me. I'm not good at looking at the chat function and looking at the chat function while I'm presenting. So just feel free to interrupt. And actually, it's not rude to interrupt. It's actually rude not to interrupt, meaning you waste your time if I continue and you still don't understand it. And I waste my time because you are not in a position to give me feedback if you don't understand what I'm trying to say. So please be rude and please not be rude and interrupt. This is joint work with, in particular, two of my colleagues from University of South Florida, with various co-authors, and we're looking into the CEO Big Five personality traits and corporate decision. And this is, when I say corporate decision, it's actually right now, it's actually 3 papers we are working on. 1 or 2 have actually been submitted. One has got rejection. We're sending that to another one, and the third one we are just about to submit. So it's kind of still in work in progress, and we are trying to improve on the papers. The reason why we're looking into the Big Five personality traits is actually in the corporate finance literature. There's been a lot of studies on overconfidence, like a cognitive bias, partly because it's interesting by itself, but also because some authors, Malmindy and Tate, back in 2005, found an ingenious way to actually quantify this overconfidence, so we could actually work with it in a large sample. There's been a little bit on narcissism, but apart from overconfidence and narcissism, a little bit marginally on narcissism, there has hardly been any papers in the corporate finance literature, not at least published in very good journals on big five personality traits. And we feel that it's kind of a gap. In the management literature, they are more open, and there's been some studies also, again, especially on extroversion, but also at least controlling for the other traits. So what our purpose or our aim is to look into more, from a more holistic point of view, the personality of the CEO and how that interacts with our various corporate decisions. And I'll come back to which corporate decisions we are actually targeting in these papers. Are there any questions or comments before I start? Okay. So the big five, I don't need to tell you that that's probably the most well-established personality trait framework in the psychology literature. And we're talking about personality. That's kind of a general style of interaction with the world, and especially in terms of social interactions. And it's something that is related to thoughts, feelings, behaviors. So it's not like, for example, in the confidence literature, in the corporate finance literature, where I say we have especially studied the overconfidence. It's not just a cognitive bias. We're actually talking about a whole personality dimension here. And the big five factor model, openness to experience, conscientiousness, extroversion, agreeableness, and neuroticism. And sometimes, at least if I have a hard time remembering the fifth, I think about the ocean. How do you measure this? Well, typically, it's a long questionnaire, a lot of questions, and then you get a score on your personality. And some of you may have tried it, and you know also perfectly well that some questions, it's obvious that if you answer in one end of the scale here, you will be very extrovert, for example, and in the other scale, you'll be very introvert. So, of course, it hinges on the fact that you actually are answering truthfully. That would be nice to apply this to CEOs. The problem, of course, being that you won't answer it. If you send it out, you have a problem with a limited number of participants. And you may also, of course, have the problem that they may answer the questions as they think you would like them to answer, not truthfully. So when we are trying to look at the kind of the population of CEOs in our target firms, we have to go to unobtrusive measures. And one of the measures that have been used previously, actually since an article from 2007, is conference calls, the CEO speech in conference calls. Conference calls, companies that are listed, they have their quarterly results 4 times a year. And in connection with the announcement of their quarterly earnings, they have a conference call. Very often the CEO participates, very often the CFO, maybe the investment relation manager. And the first part of the conference calls is an introduction, very often by the CEO or by the CFO. But after that introduction, that is kind of scripted and prepared, there's a Q&A session where the participants, the analysts, the investors, and so on, they can ask questions. And that's the part that is the base for trying to quantifying the personality trait. And the reasoning being that while they are less prepared here, they cannot have prepared too much. It's a Q&A session. They don't know the questions beforehand. What was used from 2007 and forward was you can say a software, a black box that was calibrated on psychology students. And that poses a problem, because if you're calibrating a software that should tell you something about the personality, and it's calibrated on psychology students, but you use it for CEOs, that may get you into trouble. So Harrison et al. In 2019, they introduced kind of a new machine learning tool where they actually had the personality traits of 200-something CEOs based on videos and so on, where they then said, okay, well, now we have these 200 plus CEOs. We have speech from a number of CEOs here, and now we can use the we can use the software. We can make the machine learn how, based on these 200 plus CEOs, how to quantify personality traits. And of course, you can argue, hey, is this accurate and so on, but it seems that they have done a good job. They have a couple of papers in top management journals, and it seems also to be superior to the previous way of doing it, where the problem was that it was calibrated on psychology students. Before going into actually what we are doing, the literature has looked at this ocean and looked at leadership in business in general, government, military, students, and so on. And generally, the managers or the leaders in these aspects seem to be consistently more open to experience in the lay population, more conscientious, more extroverted, more or less the same amount of agreeableness, and less neurotic. That is the exact same picture we get when we are looking at our CEOs. And our CEOs, that's non-financial, that's CEOs employed in non-financial S&P 1500 firms. Those of you who do not know what S&P is, it's Standards and Poor's. And less neurotic.
Tom, I think there was a question from Lars.
Yes.
Okay.
Hi, Tom. This is super interesting. I've been following this debate for a long time, and one of the issues with some of the speech papers where they recognize is, of course, that those questions are extremely pointing to what people are talking about. So my question here is, how can we know with this speech software when the questions are so diverse so that actually they expose different feelings, emotions relative to the question asked, since they're not standardized?
Yeah. I think that your objection or your comment will always be valid. The thing that we do in order to counter that to the best extent possible is two things. First of all, we take 4 conference calls distributed across the tenure of the CEO. So that, as you say, well, now we're in the corona crisis, well, can we actually, there the speech will probably be different, the questions will be different than if we were at the .com bubble or just after the financial crisis, in the financial crisis, just after the financial crisis. So we're taking the tenure of the CEO and then 4 conference calls distributed across the tenure of the CEO. And if we can avoid it, we avoid the very first conference call that the CEO participated in and the very last, because they may be affected by the fact that he or she is just starting or finishing off. That's one thing. And the other thing is that we say it has to be at least 1,000 words. You can say it's still a valid objection, but it would be even worse if we said, okay, we'll allow also only like 200 words or 300 words and so on. Sure. So my main concern here in terms of your comment is that if we have a CEO for our sample period is from 2007 to 2018. If we have, for example, a CEO who is a CEO in 2007, 8, 9, which is very, very dominated by financial crisis, can we actually compare the values or the measures for our ocean with a CEO who is CEO in, let's say, 2010, 11, 12? Okay. And
no. I have another comment, which is more like a comment, which is it's super interesting with these things, but of course it also raises the flag that there's lots of structural factors, like, you know, how many Twitter friends do you have, or are you a friend with Obama on Twitter, or, you know, so there's so many structural factors on the firm level as well as the individual level that is so difficult to take out of this equation. So I know the Harrison study, and I also know that there's the ASQ study about mergers, where they also looked at more or less the same issues as here.
Yeah.
But it's I don't know where you are on these things, because it's kind of, and I know this is a general comment, right? So, and also I'm a little bit hesitant with this action that unless we can take out, you know, a lot of structural facts, how can we then reduce the argument to being one of psychological factors?
Just to understand your question, right? Like if okay, let's go to the extreme. We have two CEOs here. One is very, very active on Twitter, and one is not. How would that? Yeah. But just going to the extreme one, how would that affect their participation in these conference calls that are targeted to analysts and investors? How do you see that?
No. It's targeted your dependent variable, which is their decisions. That's my main point, right? It's because we have to think about taking out all kind of explanations that would explain a decision, right? And that decision can be based on, you know, psychological factors like these, but it can also be many other things.
Okay, so now I get it. Okay.
So I'm thinking about your number of control variables in the sense.
Exactly. Okay, now I get it. I thought it was a kind of like a critique towards the measurement.
No.
Okay, you can argue that. Well, I would, from my chair, my objection would be, hey, these, unless you're very narcissistic or something like that, these CEOs, they are not affected by their Twitter accounts. But I may be wrong. I would say.
But then think about other things like structural facts, like are they featured? I mean, there's so many variables. So my question here is, how do you deal in this literature? How do you deal with spicing out these particular psychological variables from the more, you know, I call them structural variables? I think that's the biggest challenge.
Okay, well, if I still understand you right, then I would say, well, relevant control factors for me would be like on firm level, it would be like firm size, leverage, industry, and so on. On the CEO level, that would be age, tenure, gender, maybe something about their compensation contract, whether they have a lot of options and so on. And that would kind of satisfy me. I wouldn't be very reluctant unless I had a very good explanation to take in as a control factor whether they have a Twitter account or something like that.
Forget about the Twitter account. It was just an example. It was exactly. I was just looking for what you were saying, namely what kind of elements do you have so you can convince me that it's Because, for example, I was exactly thinking about how are they paid, because we know that all kind of incentives are put into all kind of payment structures that of course would influence your decision making.
Yeah, and generally we include what we have as a variable incentives, where we take the degree to which their compensation is option based, because that has been shown in the literature that if you have a very option based compensation, that should lead to more risk taking. That's exactly the reason why you put in these options instead of just giving them a flat pay. So now I kind of understand where you're heading, and Definitely. We cannot make, well, we could make a regression, but it doesn't make much sense. Just saying, okay, well, for example, in terms of acquisitions, do they make an acquisition and just have these 5 control variables? That could tell you something, but you would have omitted variable bias. So we generally take into account these, you can say, firm control variables and CEO control variables that are general in the literature. For example, on acquisitions, we take in the normal variables, and then we add on this this ocean factor. And to that extent, you can say, well, we may miss something, yes, but then the established literature in that field also misses it. So we're still contributing. But of course, there will always be points you cannot reach. But in that sense, I'm pretty confident. Else, at least, it's a blow to the whole established literature on, for example, internationalization that I'll talk about, MA, real options, and so on. But it's actually a good that you name it, because I'm covering like 3 papers here. I don't show you all the coefficients for all the control factors. They are just included. So it's a good point that if some of in the audience think, hey, he doesn't control for anything, well, we actually control for a bunch of things. So yeah.
Thanks. Thank you.
And now I won't mention the Twitter account again. So thanks. Okay. No one size fits. Yes. Oh, sorry.
There is a question from Alex as well. Alex, do you want to take it now, or do we want to do it?
Yeah, it's also kind of broad. How difficult is it to record these measures? Because I was thinking, can you apply it to other recorded conversations? So how time intensive is it to get these measures?
For my students, I say, or co-authors, it has taken a little bit of time, but it's more, it's a program in R. It's a software that Harrison et al. They provide. They're actually saying, if you want to use it, you can use it, but just quote us. And what
because I was wondering, yeah, because I was wondering.
Okay. Oh, sorry.
Yeah, we have. I mean, we have a bunch of recordings now. It's a totally different thing, but we have a bunch of recordings from seminars, for example, like today, but also teaching. So I was wondering if one could do a similar analysis of,
yeah,
teachers basically, and relate that to how students do, for example.
Well, if you're going for high quality, I would say no, because exactly as I said before, this is calibrated on CEOs. It may not fit researchers or students. That's one point. And it's calibrated on conference calls where you answer questions that you don't know beforehand. That's totally different from me, for example, now having prepared a speech and speaking. So I think there's 2 warning signals if you try to apply it. First of all, the persons are not the same, and the kind of the purpose of the speech is not the same. So I would say you could do it, but it's like garbage in, garbage out.
Okay.
Okay. Well, Tom, we'll leave you back to your talk.
Okay. We are considering business people here, and this software is calibrated to business people. Just be aware that, like, for example, the management literature has shown also that it may be different features, different characteristics, different personalities that actually leads to leadership emergence versus effectiveness. In terms of the Big Five and looking at it in a corporate perspective, it's important to stress that we don't see from our studies or from the literature in general that there's any indication that it's valuable to be extreme in one or the other Big Five traits. Meaning, it's not to say, you cannot say, oh, well, you should always have a CEO who is extremely extrovert. There's a pro and con towards it all. Actually, the only consistent finding we find is in terms of overconfidence, where we actually find, and the established literature find, that it's actually an advantage to have an overconfident CEO. But if we have time, we can go back to that. I'll concentrate on the Big Five here. having said that, then you can say, hey, well, then it's not interesting because the big 5 trades do not matter for performance. Yeah, that's right in general, but that's not the same as saying that it doesn't matter in various situations. So it's context specific. And that ties into the psychology literature with the trade situation debate. And we'll also see that when we go to the corporate decisions that we're looking into. So what we are actually, what I'm doing today is briefly describe the trade, high end, low end, and from the management, or actually from the psychology literature / management literature, just a few remarks on the dark side and the bright sides of this trade. Going back to what I said before, in general, it's not good to be, for example, extremely extrovert. But if you are extremely extrovert, well, there's some bright sides and there's some dark sides. And then we provide some cases where we're analyzing whether these traits matter. And depending on time, we'll just look at some actual US CEOs and try to apply this. In terms of the cases we're looking into, I'll just dig into this. We'll look at real options, mergers, acquisitions, and corporate internationalization. In terms of real options, this is you can say, reactively or proactively making yourself or your company ready to change. The fact that we know that business circumstances change, then you have some flexibility, and from a corporate finance perspective, we would call this flexibility real options, and we dig into this. In the literature, it has been shown that stock returns and volatility are positively correlated at the firm level. What does that mean in non-finance terms? It actually means that when there's volatility in the market, the firms tend to prosper. And that may seem counterintuitive because you say, hey, if there's larger volatility, well, then it's risky business and so on, and they should be timid. But it actually turns out that stock returns are actually positively correlated with this volatility. And this was kind of a puzzle until Griller et al. In 2012 showed that this positive relationship between volatility and actual stock returns is due to the firm's real options. And the logic is, okay, well, if you have volatility, that means that you may have a lot of turbulence both on the downside and the upside. If you're looking into the downside, then you can say, well, wow, I'm in the market now. The economy is very bad. People don't buy my products. Well, what I'll do if I'm not a masochist, I'll not say, oh, pain, that's good, pain, that's good. I'll try to do something about it. I may sell my factory ultimately. In corporate finance terms, that'll be exercise my put option. I'll sell, I'll close down. So I'll try to limit my losses. If we're looking at the upside of volatility, well, if a lot of customers like my products, what will I do? Well, if they really like it, I'll exercise a growth option. And that in layman's terms, that will be, well, I may build a new factory, for example, or I may enter a new market or something like that. So that means that I have kind of an asymmetric profile, meaning if I'm looking at the downside, I'll try to lift the floor. I'll limit the losses. And looking at the upside, I'll actually enhance the upside by exercising these growth options. And that's the reasoning why if you have a company that is very flexible, volatility is actually good because they'll adapt, they'll have limited downside, and they have, in theory, unlimited upside. What we do here then is to say, okay, well, it might be in general that the firm is able to react to volatility, react to downside and upside in a way that actually leads to a positive correlation between the return on the company's stock and volatility. But how do the CEO, big five personality traits actually interact with this? Which kind of traits are good at living with volatility? Who of these CEOs are good at exploiting this, and who are not good? So this is one of the cases that we'll go through when we go through the big five personality traits. The second is M&A, and M&A has actually, well, just going a bit or a step back, the finance literature generally was very reluctant to be persuaded by psychologists that said that, hey, it's crazy, you're not looking into like the investors and the managers and so on, because that's humans, and you just assume that they're rational. How can you do that? And the general finance response to that was, okay, well, looking at the investors, it might be that a lot of investors are not rational, but so what? Because it's not enough that a lot of investors are not rational. They have to hurt. They have to move in the same direction. Else it's just noise. And even if a lot of, especially retail investors, like small investors, unsophisticated investors, are not rational, does it actually matter? Because we have these large institutional investors that tend to be more professional investors, and they are not likely to act in the same way. They're likely to act in a rational way. And that's why you can say what we call behavioral asset pricing, like looking at the market and market prices. The behavioral finance literature has been less successful, you can say, in terms of actually explaining a good deal of what is going on the market. However, if we're looking at the corporate side, there actually Richard Rawls back in '86 said, hey, this might be right in general on the markets and so on, but if we're looking at takeovers, this is actually something where individual decisions matter. And this is one of the reasons why behavioral corporate finance has actually been more successful, because here you can say, hey, well, if you have an irrational, or what we can, in this sense, like, for example, extrovert CEO and so on, that may actually affect the decisions of the company, because the CEO tends to be powerful. There's not like 5 other CEOs who then kind of eliminate that factor as in terms of investors, where we have a lot of investors. So that's why M&As is a potential good area to investigate, and also because it has a nice features in terms of it's a major decision. So it's a decision where the CEO is likely to be one of the major players from the company. And our focus here is, how do these personality traits of the CEO interact with 2 questions. First of all, in our panel data analysis, does the firm in a given year announce at least one acquisition which is eventually successful? So the question here is it more likely that, for example, an extrovert CEO will make an acquisition than an introvert? And if they do, what is the stock market reaction to such an announcement? Meaning, is this actually something that benefits or harms the stockholders? That's the 2 questions we're focusing on in our paper. The very last case we have is internationalization. And what's the gameplay here? It's you can say pro and con, or black white, in terms of what playing field they're entering. If you're a domestic company and now say, hey, I want to be more international, I want to be multinational, maybe, you can say, at the one hand, you can say you are more diversified. Just as if you only have 1 product in a company, if you have 10 products, it's less likely that you'll suddenly be hit by the 10 products at the same time, as opposed to if you only have one product. If you are in 10 countries, it's more likely that you will be diversified in the sense that your risk goes down. It may also give you some operational flexibility, especially if you also produce in different markets. The obvious example is foreign exchange. If you're producing from Vietnam and suddenly the currency of Vietnam depreciates, then it's an advantage to produce more from Vietnam as opposed to maybe Thailand or Mexico. So in that sense, you can say you are operating on a field of less risk. However, if you go abroad, you'll also encounter a lot of new risks that you are not encountering if you're a domestic company. The most obvious, again, is foreign exchange risk, but like political risk, economical, regulatory, just the sheer complexity of managing a multinational company may also by itself pose as a risk. And actually, if you're looking at the literature, both theoretically and empirically, it's a trade-off. We have papers empirically that show a negative correlation between internationalization of the firm and risk, and a positive. What we are interested in is, you can say, two features of the firm's internationalization. The foreign sales ratio, how much sale it could, going to extreme, it could be one, we're looking at US companies, it could be a US company that manufactures all its goods in the US, and how many countries or how much sale do they have abroad. And we're also taking into consideration the other feature of internationalization, meaning the foreign subsidiaries of the firm. Unfortunately, we cannot distinguish between sales subsidiaries and production subsidiaries, but it tells us something about also the what is called the breadth of internationalization. The foreign sales ratio, that could be very high, but it might be, for example, US companies only selling to Canada. But when we're looking at foreign subsidiaries, we're looking at how many foreign subsidiaries and in how many countries. So we get a grasp of the breadth and depth of the internationalization. That's the three cases we are looking into, and we'll now go to each trade and then look into how it may or may affect these three cases. And deliberately, I only include the cases where we actually find something significant, because else we'll be sitting here for 3 hours and I'll tell you all the cases where it didn't affect. So, and it might be that I can sit there for 3 hours, but definitely I would probably be the only one that's still sitting here after 3 hours. So, okay, openness to experience. Your tendency to embrace novelty, you're imaginative. High levels of openness could lead to kind of unpredictability and lack of focus simply because you're bored. If you have seen it yesterday, why should you see it today? And on the other hand, low level of openness is kind of closed-mindedness. You don't have fantasy. So if we're looking at the high end, seek out new experiences. Low end, traditional, conservative, prefer familiarity to novelty. If we're looking at adjectives, it's on the high end, it's creative, being intellectual, or philosophical, deep, artistic. Looking into a management context, or at least a more firm level context, you say the bright side of being openness is that you're curious, intellectually curious. You have divergent thinking. You're not too traditional, and it may actually be good, especially for what is called transformational leadership, where you encounter new things. The dark side is, as I said before, you may simply get bored. If it's too conventional, too traditional, you'll easily be distracted by new wild ideas, and also the problem that it might be that what you did yesterday you don't want to repeat today is your continuance commitment. Maybe that yesterday you thought it was a great idea, today, hey, now it's getting a bit boring. So this continuance commitment may be a problem in some cases. And that's it. and that's related to our first case here in terms of real options. And if you have some guesses on what you think empirically, just shout and interrupt me. This openness to experience, the real option here when we're talking about volatility, our main hypothesis would be that this non-traditional thinking, that you're actually willing to step out of the silo and think, you can say, divergent. We would expect that to be positively correlated to the ability to you can sail through stormy waters, whereas as opposed to waters where you would say, hey, there you will be bored. And what we actually find is a positive coefficient. So it seems to be in an empirical sense that that our hypothesis is correct. Now, this looks favorable, meaning, okay, well, if you are in very turbulent waters, it's nice to have a CEO who is very open to experience. The backside of that coin is, of course, if you're in more calm waters, if you are for example, it could be like a brewery who's making the same beer or making beer yesterday, also today and tomorrow, there such a CEO might get bored. In terms of internationalization, it's a pro and con, because on the one hand side, you can say, hey, if we're going out like as tourists, then we would say, hey, if we are open to experience, then we would actually go to exotic countries and think, hey, that's great. And that might lead to a positive correlation. However, there's a huge difference between us going as tourists and going for 1 week or 2 weeks or 3 weeks, because we don't need to have this continuance commitment. If you are a company that wants to sell abroad or produce abroad, it's like turning a super tanker. So you need to have this continuance commitment. So it's a pro and con, and it's an empirical question whether the correlation is positive or negative. And what we do find is that it seems to be negative. So this lack of continuance commitment dominates. Any questions before we go to conscientiousness? Okay.
Yes.
Yeah. Sorry. Yeah.
So I'm sorry, but the discussion is more important than the presentation. But the question here is, do you really believe that these things are linear? Did you model them in a linear sense? Because of course, if I'm super open to experience, I'm crazy, basically. So, or a psychologist would say you're borderline crazy, right? So the question here is that, did you model this in a non-linear fashion?
We do it now, and we try it with non-linear fashions. I honestly don't remember in which papers we tried also the non-linear. But generally, we have found that whereas theoretically you're perfectly right that there might be on the outskirts, there might be some non-linear features. We cannot see them in the data. Where we have been able to see it on some of my previous research is actually narcissism, where narcissism tends to have, at least in some features, like in terms of risk-taking, a nonlinear relationship, so that we actually find, for example, that a very, very narcissistic and a non-narcissistic CEO take the same risk whereas a moderate narcissist takes more risk. And the rationalization after the fact is that we tend to focus, when we say narcissism, on the grandiose narcissism. But psychology studies have shown that if you're very high in grandiose narcissism, you also tend to be affected by vulnerable narcissism. And it's to that extent, you can say it makes sense that we could find, and we do find, a nonlinear relationship. And you could argue the same with some of these big five. We haven't found any empirical support, and I haven't found. Of course, if you like, say this is like borderline, but these are CEOs, so it's presumably persons that are able to cope with a kind of normal situation. So I would say probably some of the outliers that would create in some other populations a nonlinear relationship, they are kind of out, because they wouldn't survive up to being a CEO of S&P 1500 firms. At least we don't see we don't see that. So
Thanks.
Conscientiousness, dependability, you're self-disciplined, you have a detailed, very often planned behavior, and if you're high in that, you may be perceived as stubborn based on your detailed planning, while if you're low, it might be that you are regarded as unreliable. The high end, you're very controlled. The low end, you have a hard time keeping to a schedule, or disorganized, and maybe also be perceived as unreliable. If we're looking at adjectives, the high end is organized, systematic, neat, efficient. The bright side, if you're looking more into a management situation, it might be a good thing that you're very disciplined. You have a strong sense of direction based on your detailed planning. You will also tend to also show a lot of integrity, which also may be valuable. The dark side is that you tend also to be less willing to, you can say, innovate, take risks, and so on, and resist change. So you want to keep, and that's back to the stubborn part, you want to keep to your planning. So you don't want a lot of volatility, for example. You may feel threatened by turbulent circumstances simply because then you cannot keep your schedule. In terms of real options, almost, well, to some extent, you can say that it might be two factors. That the fact that you really stick to your goals and so on may be good, but on the other hand, and what we probably will expect is that if you're too detailed planning and you suddenly experience a lot of volatility, hey, then your planning is kind of obsolete and you don't feel good. You cannot plan yourself out of that. The COVID-19 crisis is probably a good example. How could you plan yourself out of that? You have to very quickly reschedule. So high ambition level and you want to fulfill expectations might be positive, but our main hypothesis is that this narrow field of vision and your traditionality will feed into a negative correlation. And it seems to do that. In terms of M&As, remember we had two questions. We had the first question where they would actually be more likely to make an acquisition, and we don't find any significant effect there. But looking into the M&A response, meaning when a conscientious CEO actually makes an acquisition, is that then beneficial, or does it harm the shareholders? And that's where we would say, well, okay, if a conscientious CEO actually enters an acquisition, it is really well planned. It's not just, hey, well, that will be good, that will build my empire, or that's a good wild new idea, I like it, but it should be a planned approach, and we would guess that it is positive, and it is. In terms of internationalization, we again have this, that you can say, on the one hand, you're ambitious, you want to stick to the plans, and we talked about a super tanker turning, you really have to have a detailed approach to that. On the other hand, we know also if there's a lot, kind of like not only volatility, but a lot of new risks and so on, a conscientious CEO might not feel comfortable about that because this detailed planning might be, in some circumstances, obsolete. So we have two opposing factors, and it's an empirical question which dominates. It seems to, you can see two of them are only at a 10% level, but it seems, if anything, that the narrow field of vision and the cautiousness, the lack of detailed planning because you meet some new risk dominate. Any questions before we go to extroversion? Okay. So extroversion, you seek stimulation from other people. You love social interactions. High extroversion, attention seeking, maybe domineering actually. Low extroversion, that you're kind of like you have enough in yourself. If we look at the high end, prefer intense and frequent interpersonal interactions. You tend also to be optimistic. Low end, you're reserved, and you prefer like close group of friends as opposed to large gatherings. In terms of adjectives, on the high end, you're talkative, outgoing, extroverted, of course, energetic. Okay. Extroversion. Okay. It's okay. I have to delete that one. 51. It should have said not conscientiousness under the. Yeah. Great. So extroversion in a bright side. The bright side, you're assertive, you're active, you're energetic. You tend also to be optimistic, positive emotions. So it seems like a nice guy, actually. And it seems also to show that extroverts tend to emerge as group leaders and be kind of leader-like, and also good at what is called transformational leadership, where you actually have to move not just yourself, but a group towards a new goal. The dark side, well, you may, if you're very extroverted, have a tendency to behave in bold ways, grandiose ways. If you're very extroverted and really like the social interaction, you may have like superficial social interaction because you want to interact with so many people. You may also, based on this optimism, overestimate your own capabilities. Just before going to the cases, as I said in the very beginning, there has been some studies on extroversion, and especially in the management literature. And one of these studies, very recent studies, showed some of that new, some of that confirming old studies, that CEOs high in extroversion, they tend to receive a higher compensation. They have longer tenure. So it's and they are less likely to. That's almost the same. Less likely to be fired. That means that it seems actually that the company likes this CEO. They have more outside directorships, and that ties into their extended network that also transforms into having directorship. That means that they are members of the board of directors at other companies. They have higher investor recognition, so investors know more about them because they are more likely, these extroverted CEOs, to tell about the company, to participate in various conferences and so on. And they also show here in this paper, at least, that the firms tend to have higher growth and market share, but not higher profitability and profit margin, ROA, and so on. So again, back to the fact that we don't see a close connection between any of the big five and performance in general, but they may be good in some circumstances. So to our cases, M&A and CEO extroversion. We didn't find anything on real option. But in terms of M&As, we would tend to have a one-sided, a one-sided hypothesis, because these extroverted CEOs, well, they may behave in bold manners, bold actions, and so on, and that's an M&A. But more importantly, they have an extended network. So that means they are more likely than introverts CEOs to know about good targets. And they are more likely also, given their, you can say, their social interactions, to actually make such an integration of two different cultures when you acquire another company a success. So we would believe that there's a positive correlation between M&As and extroversion, and we do find a positive correlation. On how one thing is that they make more acquisitions, but is it actually good for the shareholders? And there is more. As I said before, they may actually be better at targeting the right firms because they know more about potential targets, and they may be better at the integration. But on the other hand, if they are drawn towards like bold action, just to make the bold actions, then that could be negative. So as we see it, it's an empirical question, and the literature. Well, our findings, but also the literature beforehand has shown a positive reaction, meaning what that actually says is that when you look at the stock price the day before the announcement, when the investors at the stock market, they didn't know anything about this merger. Then day zero, it's announced by the company that now we're going to take over this company and we'll pay so much. What is the stock price the day after? Okay, so it's the stock market's reaction. It's the stock market's best guess on, is this a good deal or not a good deal? And there, it seems to be good to have extroverted CEOs. In terms of internationalization, extroversion, they have an extended network, and they like social encounters and so on. So we would only have a one-sided hypothesis here, saying, well, that is probably related to more internationalization. We do find that not on foreign sales ratio, but in terms of the subsidiary level, we find both in terms of number of foreign countries and number of foreign subsidiaries. And it's actually a bit surprising that we don't find it on foreign sales ratio, but we do not find that. Any questions on extroversion before we go forward? Okay, let's go to agreeableness. Agreeableness, you're cooperative, you're compassionate. High agreeableness might have the, you can say, disadvantage that you're easily walked over, that you're so complacent that you'll say, oh yes, even if you don't agree. Low levels, well, then you might be argumentative or untrustworthy. High end, regard others with sympathy and act unselfishly, and low end, you couldn't care less. Adjectives: high end, kind, sympathetic, warm, cooperative. Right side is you tend to be modest, altruistic behavior. You trust other people and you're trustworthy. And in a corporate sense, very important that you're cooperative. The dark side may be that because you are so agreeable, you may tend to avoid interpersonal conflict. You may not be able to take the harsh decisions that has to be taken sometimes. So that's the problem. And they say that you may be suited for positions that demand complacent adherence to the status quo. And that actually ties into our first question in terms of real options, that if you're in turbulent waters, you have to adjust and you have to make some decisions that pleases some people and definitely does not please other people. So you're probably more likely to thrive in a situation where you don't have to take these tough decisions. We actually, on the real options, we do not find that. We do not find any significant results. And that probably is back to that, okay, you don't take the harsh decisions and you are better at being at a status quo. However, the right side say also you're cooperative. And it might be that you have to be a tough guy if there's a lot of volatility, but you also have to be cooperative to make your employees go with you. At least we don't find any empirical results on real options, where I would actually have thought that we would find a negative relationship. In terms of M&A, it's not, we don't find any in terms of agreeableness and tendency to acquire a company, but in terms of the response, in terms of the stock market's reaction to an acquisition, say, are they actually benefiting the shareholders or not? And we would tend to say that you could argue for positive and say, well, they're very cooperative and that must be good if we are merging with another company and we're merging two cultures. On the other hand, you can say, hey, if you're merging, you very often are in a situation where you have to cut costs simply because there's you do both things in both companies, and you have to downside. That's sometimes, at least, the background for the merger. So we would expect it to be negative. And it could also be not only in terms of the integration, but also in terms of the price paid, that you may not be tough as a negotiator. You simply may pay too much for the target. And what we do find is a negative correlation here. In terms of internationalization, we would think that it's very important to be cooperative. If you have to cope with 10, 20, 50 different countries and cultures and so on, if you're not cooperative, you have a problem. On the other hand, tough decisions may be possible. So cooperative skills definitely points in the positive direction, but if you are not willing to take the tough decisions, it might point into a negative direction. So we don't have any clear-cut direction for the hypothesis, and it's an empirical question. And it seems actually very on a 10% level. So it seems that if something, this cooperative skill that actually dominates, but not very strongly. And the last trait, neuroticism. Any questions for agreeableness or other questions before? Okay, neuroticism. How prone are you to psychological stress? Your tendency to maintain a level of emotional stability and control your impulses. On the high end, you're calm and steady, and if you're low end, highly reactive and excitable. If you're very neurotic, you have a lot of emotional distress. In the low end, you're very stable, both feet on the ground. In terms of adjectives, in the high end of neuroticism, anxious, jealous, moody, emotional, envious. The bright side, and the only bright side probably looking into a CEO position, is that you show yourself, not just as a machine, as a CEO, but as a person behind it. The dark side is that it is very, very difficult to be a successful CEO if, of course, if you're neurotic, but if you're towards the neurotic side. And emotional stability is also regarded as kind of a necessity for effective leadership. If you look at real options like, hey, now you're moving from calm waters into turbulent waters, is it good to be neurotic? Probably not. You need to have both feet on the ground, and we also find a negative correlation. In terms of internationalization, it again would be the same, that we say, it's difficult to find any positive sides. You could, of course, argue that you show yourself, and that might be good, but we have a one-sided on the negative. Again, if without both feet on the ground, how can you enter new cultures with all the risks that you encounter in that sense? And we do find a negative association here. If we just look at a quick summary, we can see that it's pluses and minuses. The only one that does not have any negative is actually extroversion. but that is only based on these, you can say three to four cases that we actually have. Any questions? Because what I'll actually do now is to just give a brainstorming into an actual kind of application to some of the CEOs we have in the sample, 8 CEOs. But if there are any questions to kind of the setup and so on, then we might just as well have them now. Okay, I'll just go brainstorming into this. I'll just show you eight CEOs where we apply this, and with this machine learning software. You can see Alan Mulally, who is CEO for Ford from 2006 to 2014. When we apply this, and the colors here is that if it's red, it's below the median of our CEOs. If it's green, it's above. And if it's dark green, it's more than 1 standard deviation above. If it's dark red, it's more than 1 standard deviation below. So what we're doing is to say, hey, we don't focus on light green or light red, but if we have a very dark green or dark red, we'll see what is likely here. And in terms of Alan here, he is much more extrovert than the average. And that should then imply that he takes more acquisitions, that he's actually benefiting the shareholders, and he's also more likely to internationalize the company. Bezos, who just resigned as CEO for Amazon, he's very open to experience. That should mean that he's very good at sailing the ship through turbulent waters, not so much in terms of internationalization. He's very low in neuroticism, which is good, again, for turbulent waters. So we can say in turbulent waters, he's very good at acting. And that actually kind of also probably applies to how he runs Amazon. In terms of internationalization, we have here a plus. So you can see in internationalization, we have a plus and a minus. Jeffrey Immelt is the only CEO here of these 8 CEOs that I include that is actually higher in neuroticism, which should be bad for turbulent waters and for internationalization. Lawrence Edward Page is, by no comparison, the CEO who is most towards the extremes, both in terms of openness, extroversion, and agreeableness, and then very low in neuroticism. We have Mark Benioff, who is very high in openness, agreeableness, low in neuroticism. We have only 1 female, and that kind of is actually more or less an overrepresentation, 1 out of 8, because we only have 3% of our CEOs who are females. And she's actually, in that sense, or in the sense of big 5 personality traits, fairly normal. Having said that, and that's actually back to your question, Lars, can we actually count on this? Because this is calibrated on 200 plus CEOs, but the overwhelming majority are men. So the question is, can we actually apply this to females? And it may be that we cannot. Well, okay, they're only 3% of the population of the sample here. So in that sense, it doesn't really matter, but we could put a question mark to whether you can actually apply that to females. Do they differ in terms of how to translate their talk into big 5 personality traits? In empirical sense, it's no problem because they're only 3%, but it is a valid question. Robert A. Eager, very high on agreeableness. Timothy Cook, very high on openness. And if you look at it, you can see they are diverse. If you look at only the extremes, you can see that at least these 8 CEOs tend to be fairly high in openness and extroversion, agreeableness, and most of them are low in neuroticism. And then you can translate that into what are they good at not. Having said that, you would never in practice use this on the individual level. You wouldn't believe too much in it. On the group level, it's fine. But of course, like a board of directors would never like make such an analysis. They would actually go for like, for example, a questionnaire or interviews and so on. So our question is not, of course, it more often than not, it should be pointing to the right direction on the individual level. The question is here at the group level, does it work? And we think it does. If you can say kind of main conclusion, this is a summary of actually 3 papers, but we think that it matters. A question that I haven't addressed is whether we're talking about association or causality. Because what actually shown you is association, where you can question mark, is it actually causality or not? And in some of the cases we find, well, okay, if I should say generally, we generally find some support for causality, meaning it's probably a mix of matching between firm and CEO, meaning that the firm actually seeks a CEO that fits into their strategy. It's not the sense that a CEO comes into a company and then transform the company just based on the CEO's kind of visions. But when we include firm fixed effects, we sometimes actually see that it's still significant. So in general, you can say it is association, definitely. Is there causality? Yes and no. But it does have implications in terms of CEO selection, meaning which kind of CEO would you actually prefer if you, for example, want to have a more active internationalization strategy? What kind of CEO is better in terms of acquisitions? Who is more likely to acquire other companies? And does it actually benefit the shareholders? In terms of these calm and turbulent waters, volatility, it gives an indication, well, which CEOs are actually likely to prosper in turbulent waters or in calm waters. And it actually also makes the question, if you're actually in kind of calm waters, but because of competitors or regulatory forces or whatever, that you're actually entering a phase of a lot of volatility, well, what kind of CEO should you maybe replace your current CEO with? That's one question where these results matters, but also CEO management, or you may call it corporate governance. Given a certain CEO with certain personality traits, well, how would you restrict this CEO or encourage this CEO? Back to our discussion before, in terms of, for example, incentive pay. Would you put a lot of the compensation into incentive pay, or would you be more reluctant to actually encourage more risk-taking? A very extrovert CEO, for example, who tends to be optimistic and maybe go for bold actions, you may be more or less likely to pay him or her with a lot of incentive compensation, a lot of options, because that would lead to even more risky behavior. So that's the main conclusion. And if you have further comments or questions, and please, all kind of comments or questions, because we're still working on these papers.
Thanks, Tom. This is super fascinating. For the rest of you out there, if you could turn on your camera, if at all possible, it's great to see who's there. So the floor, or rather the screen, is now open for questions and discussions. Who would like to begin? If not, I can also begin, Tom. Maybe could you go back to the overview of the different CEOs, which I thought was a very interesting. It was almost a litmus test also of whether the analysis works, right? I mean, I don't follow any of these people closely, but it seems like the type of structures you get from the speeches matches very well my kind of ideas about how are they acting and how are their firms acting. So it seems actually, I think, very, very convincing to see these patterns here. And I wondered, have you done kind of an analysis across all your CEOs to see, do they cluster in particular places? In other words, do some of these characters tend to come in traits that defines one type of leader as relative to another type of leader? And would some of these, so to say, be iconic or prototypical of certain clusters of leaders that you can see if you actually look at all the CEOs that you have looked at?
We haven't done that. The only thing in terms of, you can say, clustering is that we, of course, we control for industry, but we haven't done that. And you can say it could be interesting to look into, like, for example, let's say manufacturing versus. We don't have that, but if we had a lot of mining companies that is distinct, different, or more service-oriented companies, the problem, of course, being that if we go into detail into industries like manufacturing, that's a lot of companies, so there we could do it. But if we go to industries where we may only have, I should say, we have 800 something companies in total. But if we go to industries that have less than, for example, 100, or even if they have 100. I would doubt that we could find some significant, but you're absolutely right that we could. It could actually be interesting to see, and that would be pretty easy to see, looking into like broad industries. Is it so that, for example, very research oriented companies, they probably would have, I would guess, CEOs that are more open to experience, for example. And maybe less conscientious, whereas more stable companies, like I would say like the beer company and so on, would more have probably like conscientious CEOs and so on. And that would be nice, at least for also, I see that, because it would be nice illustration also, as you say now, for example, you say, these CEOs, well, it kind of fits what I expected. If you could also at the industry level show that in these industries, people tend to be more, for example, open to experience, and that's because this industry is high on research development and so on. And that would, if like, for example, in terms of publication, if a referee said, I don't really believe this, and then that could be a convincing argument. So, yeah. Thank you.
And just to follow up, it's very interesting that Bezos and Cook have the same kind of profile in your model, right? And I guess they're kind of the most and second most successful.
Yeah, that's right.
Where actually HP and Alphabet also have the same profile, but they're high on conscientiousness. And you could ascribe that to, in a sense, an inability to deal with the real options and the internationalization according to your model, right?
Yeah, now you say Alphabet and
HP, Hewlett Packard, and also the same profile.
Yeah, you can say in terms of conscientiousness, they are not more than one standard deviation above, so they're not like very deviating.
But it's very interesting. Yeah. Other questions?
I have a question about the model, machine learning model. First of all, I think this is super fascinating and really interesting research and findings. You mentioned that you did firm fixed effects, but I'm just wondering to what extent the model captured change in how you capture personality traits over time. So like within firm or CEO variation.
Personality traits, we treat them according to the psychology literature as given. Like once you are extrovert, you don't change to introvert. And the psychology literature has stated, at least some of it has stated, that like at age 30, you're more or less set. You tend, when you get really old, you tend to be more agreeable and so on, but you're more or less set. And we only have 2 CEOs that are below 30. So we'd say definitely we treat them as set. To your question about firm fixed effects, that's how we within the company deviate, because then we have one CEO that is exchanged by another one, and that's how we can kind of say, okay, well, within the same company, if they have the same strategy before and after the change, the only thing that changes is the CEO's personality traits, and then that's an indication of causality. Having said that, we cannot control for what is called variable firm effects, meaning it might be that we see that, let's for example say in terms of internationalization, that we have a company here that is not too international, and then they change the CEO and we suddenly see that they're getting more international. Well, that could be actually, that could one extreme be that the CEO actually moves the company in that direction, and it is him or her who changes the strategy. But more likely it is that the board of directors, the shareholders, they want to pursue a more international strategy. Thus, they fire the old CEO and get in a person that is much more fit for internationalization strategy. So what will look in our firm fixed effect like as a CEO effect is actually a strategy that is changed by the board of directors and then is implemented by the new CEO. Yeah.
Few questions, Tom. So one is, how do you know if a CEO is fired or has left?
We don't go into that. We don't go into that.
Okay, so you cannot assume that the board wants another strategy. You just know that the person stops. So you can't really say if.
Yeah.
Okay, so that's an important point.
Yeah. And Duane, there have been studies looking at like whether it's voluntary turnover or forced turnover. And you could do that if you really wanted to go into more causality. Then you should go into who is fired and who is not.
Exactly.
The problem, of course, being also that what about all these CEOs who are about 60 and retire? Is that then they have like got a nod from the board of directors that it might be soon a good idea to retire and so on? So we have definitely some situation where it's voluntary. Definitely some situation where they are fired, and then we have a lot of gray areas where we say, "Hey, what's that actually?" We have in other studies we have used. We have one indication, for example, where that's causality is it's more likely that a CEO who stops before 60 is fired than a CEO about 60. Okay, but that's only indication. Else you should like some at least one study I've seen actually goes into every one and each CEO replacement and looking into like the press or press releases and so on. How is that categorized? Is that categorized as a fire, as a forced turnover, or voluntary turnover? But in our present setup, we only have that it's a change. Yeah.
One question more is, do you have anybody in your sample who is in one company and where you can draw one personality test and then moves to another company in your samples and you can draw another personality test?
Yeah, that's interesting. We only have, I think we have, was it like 2 or 3 persons? So you can say like for illustrative purposes you could do it, but it's not enough that no matter what I find, if they're alike, I would say wow, but that's not a proof. It's only like 2 or 3 persons, and if they're not alike, I would say is that representative or not? So unfortunately, within the S&P 1500 firms, I was actually surprised. We're looking at 12 years. I thought that would be more changes where actually one CEO moves from one company to the other, but it seems that they're moving, maybe because it's fairly large companies, that they're actually moving out of S&P 500 or 1500, or maybe they're going out into like where they're professional board members instead. But I was surprised to see that very, very few, and I think it's in the range of like 2 or 3 persons. So it's definitely not something where we could say, hey, we're looking into like 30 or 40 persons, and then we can see does it seem to be valid. So
just to add in again, Tom, I think it could be really interesting to look at these different sectors, because it's also striking if you look at Ford and GE, which I guess are kind of, old style manufacturing more than some of these new economy and entertainment-based companies. Then they actually have a very similar profile as well, right? So you could say, particularly GE seems to be your leader from hell if you're an employee, right? High on narcissism, low on agreeability, no contentiousness, not open to anything, right? But the Ford case is actually very similar. So it seems as if, just based on these 8 cases here, that the new economy, as exemplified by Alphabet and Amazon and Apple, just calls for a completely different style in personality than Ford.
You're absolutely right. It could. My only question would then be: would that be interesting, like as a descriptive feature in a research paper, or would it actually be a paper by itself? Because I wouldn't. Well, it's more descriptive than actually analyzing, but the description would be could be very interesting. That's for sure. Yeah. And it would actually also be convincing in the sense that if you could see, as you point out, just with individual firms here, if you could actually see some patterns, then it would be reassuring.
Yeah, because I think you need, in a sense, 2 proof of concepts. And one is that you can actually do the big 5 based on these speeches, right? And the other one is that this is meaningful relative to where the companies are acting.
Yeah.
And I think if you could see some major groupings that says actually we see different trends across these sectors, the different forms of economy.
Yeah, definitely. Yeah, definitely. That would actually be very interesting.
Do you have anyone doing the NLP analysis here in Aarhus, or is that done by your international collaborators? So the natural language processing analysis?
The actual application to R was, in this sense, was done by a PhD student at University of South Florida. But I do have, I have 9 theses within this behavioral corporate finance and master's thesis, master of science thesis, and they are actually applying some of the data, and one of them is actually extending my my sample period because they want to investigate the COVID-19 crisis, and they have actually successfully used that they have received access to the program and applied it. So it seems not, well, they had a bit of difficulties because they said that the program was actually meant for an old version of R and they had a new version. So it always gives a bit of complications, but they have managed to do it. So.
Because if at some point you want to look into it, there are people at Center for Humanities Computing, so Christopher Nielbo and Rebecca Baglini, who know an awful lot about doing natural language processing, and they haven't done it in relation to the big 5, but they have all sorts of other skills in relation to it.
Yeah.
So something at some point you want to explore, maybe they could be worth getting in touch with.
Yeah, and would that then be to to extend, so we are not only looking at big 5, or would you say that in terms of the big 5 we could get some additional measures, or how would you see collaboration?
I think so. Maybe they could give you another idea as to what goes on in these discourses, right? So do you want to have other measures than the big 5 in analyzing these utterances? I think that might be something they could provide.
Yeah, great, super.
But it's just to say, they do an awful lot of work also looking at novelty in sentences. How much do they look like each other? Which kind of styles do they come from? So they can do a lot of what's called topical analysis, and these are the analysis of these corpora.
Okay. I'll just come back to that with the contact person, because it might be now having gone out of the silo, it might be nice to try to exploit it. Great, thank you very much.
Cool. Any other questions? Well, thanks a lot, Tom, for sharing this amazing data here. That will give me food for thought next time I buy a product from Apple. Or decide not to watch a Disney movie. But take care, everyone, and stay safe.
And thank you very much for letting me present, and thank you very much for the questions and comments. It's just been very valuable.
Great. Take care. Bye.
Same, thanks, bye.